Welcome back, everybody. Welcome, Chris. Welcome, Ryan. It's a pleasure to have you at Climb.
Yeah, thanks for having us.
Yeah, appreciate it.
So, boy, this is exciting stuff we're about to talk about, right?
We like to think so.
One of business people's least favorite things in the world, credit card processing. But it's incredibly confusing. We look at statements and can't ascertain what they mean or what kind of a deal we're really getting. There's a lot of charlatans out there that are peddling credit card rates and things that aren't really true. We see it all the time. We have customers call and say, hey, this guy came in and promised me the world and it's so much a better rate than I'm getting. But when we really do the deep dive, it isn't. And so today what we're trying to do is teach everybody more than may ever want to know about credit card processing to make it a little bit easier for them to understand what's happening. So let's just get started. I think you guys wanted to start with some common credit card processing terms. So why don't we start there?
Yeah, that sounds good to me. There's 100 different terms in credit card processing, but some of the biggest ones that you guys will want to know or be aware of. One is interchange. Interchange is just a fancy industry term for wholesale cost. It's actually what the card issuing banks will get paid. These interchange rates are the same for every processor, every credit card processor out there, no matter where you go. Interchange is the exact same. So that is a standard point. There is also Visa, MasterCard, and Discover, which we refer to as the card networks. They take a cut as well, but a smaller cut. And then there is your credit card processor who takes the smallest cut. Those are kind of the people involved who get paid. Ryan, are there any other terms that you wanted to cover on here? Basis points, anything like that?
Yeah, you bet. And I'll kind of expand on interchange. So like you were saying, ultimately the way that I like to explain interchange is that, like you said, it's the base or wholesale cost of doing business in credit cards, right? No matter what business you are in the country, no matter what credit card processor you're with, everybody has to pay it, and it's all the same, right? It's what those card issuing banks and brands are taking for access to their networks and their banks. What Chris was alluding to there is a basis point, right? The way that those credit card processors, as well as the card issuing banks and brands are assessing fees is both a percentage as well as a per item. A basis point, right, is 0.01 or 1/1000th of a percent. But it's 0.01%. So for example, you guys might see on statements, 0.15%, we would call that 15 basis points. But again, that is the way that those processors are assessing those fees out of a percentage to account for, their profitability as well as accounting for those costs that come from the card issuing banks and brands.
Okay, so there's a question that it's actually a statement. We'll be doing a demo with a customer and we'll say, who's your card processor? And 9 times out of 10, they'll say, well, I bank with Bank of America or Wells Fargo or Chase or something like that, or their local, Bank of the Pacific or whatever. But those aren't processors. So can you explain the difference between what is a processor and, where do they fit in the scheme of things?
You bet. Yeah. So there are what we call the 5 big processors, the 5 large processors. There are 5 of them. They handle their own acquiring, right? Both front and back end processing. I'll say front end processing is getting authorization from banks to return the authorization back to a point of sale to show an approval, right, or a decline, whatever that transaction response is. The back end is funding, right? So that's where the funds that were pulled from that cardholder's account are then sent to the merchant's bank account for the processing that occurred. There are 5 big guys that handle all of that. So that's Chase Payment Tech, there's TSYS, there's Global Payments, there's Fiserv, right, which is First Data, there's FIS, which is WorldPay. Those 5 guys handle that credit card processing. Those are processors. There are a number of what we call ISOs or independent sales organizations that act on behalf of those processors and potentially can brand their processing. And there's a number of ways that you can act as an ISO or what we call PayFac. I won't get in the weeds and bore everybody with the details there, but there are a number of ways that you can operate on behalf of those processors to provide processing. But the answer to your question is there are five big guys, and those are the guys that I mentioned previously.
Okay.
And I may add there just that, and maybe a little bit of simpler terms, there's two sides. There's banking. So you may have a Chase payment tech who is a credit card processor, but they're also a bank. So there's Chase credit cards out there, and they're making money whenever somebody uses one of those credit cards as a processor. They're also on the credit card issuing side, they are fronting that money for that card holder to process that transaction until they pay their bill off, hopefully at the end of the month. So there's two different sides of that. So there's places like Chase that are both a bank and a credit card processor. And then there's other places you may have heard of. Most credit card processors are just a processor. They're not fronting the money for the card holder or anything like that. They are simply establishing the relationship between you, the merchant, and Visa, MasterCard, Discover, American Express. Because those card networks do not work with merchants directly. Obviously, there's millions and millions of merchants. So the processor makes that connection for the business owner.
Okay. Great. So where does the interchange come from?
So, sorry, go ahead, Chris.
It really comes from two different places. It comes from the terminology we covered initially, card networks, Visa, MasterCard, Discover, card issuing banks, it could be Chase, Capital One, Wells Fargo. It comes from those two companies. And they set base rates for interchange, which is the wholesale cost. And there's 600 different card types out there. There's Southwest Airlines points this, or Delta Airlines that, or this hotel and that hotel, and debit cards and prepaid cards. And it goes on and on. There's over 600, and they all have a different interchange cost. And it's the card networks and the card issuing banks who get together twice a year in April and October. Correct me if I'm wrong there, Ryan. I believe that's correct. And they have a committee that determines these rates and what each specific card type's wholesale cost should be set at. And again, no credit card processor controls that. So no matter what credit card processor you're talking to, they all have the same wholesale cost. So they can all compete on a level playing field with you guys. But that is where credit card processing charges, the interchange, comes from. At least the wholesale cost is both the card networks and the card issuing banks.
So then from that point, so everybody's the same. So then the competition starts after that fee. And that's where all the confusion then comes in as well.
That's exactly right. Yeah. So essentially above interchange, right? Again, that base or wholesale cost. The credit card processors and ultimately that's how they compete with each other, but the credit card processors are offering rates and fees that account for their profitability, right? It's typically a smaller amount than interchange, but there are a number of ways that credit card processing can be offered by those processors, and like you were mentioning earlier, it can be a daunting thing to look at. So that's something that we'll dive in here in a little bit.
Yeah. Okay. So, actually, before we get there too, so we know, everybody knows about Visa, MasterCard, American Express, Discover. Now people are learning about, the five big processors, but most of the time people aren't dealing directly with one of the five big processors, unless you're a big chain like Walmart, probably dealing with one of the five bigs. But when you're an independent pharmacy, or even, in some of our institutional pharmacies, hospitals and universities, they're really not dealing directly. They're dealing usually through some kind of a third party. And those people are usually taking a piece of the pie as well, correct?
That's exactly right. Mm-hmm.
Do we have a term for those folks?
So there's a number of ways that you can get to a processor, right, and handle processing. They're what we call independent sales organizations, or ISOs. There are financial institutions that sometimes are acquirers themselves, sometimes not. Smaller banks aren't. There are agents that are selling point of sale solutions and handling processing through processors, or some of the big five. There are also what's called PayFacs, or payment facilitators. They are software companies that provide their point of sale solution, as well as have contracts with credit card processors so that they can kind of white label the experience, but provide processing as well as sell point of sale solutions.
And cut out one piece of the middle.
Exactly. Yeah. So they're providing credit card processing as well as that solution instead of only selling the solution and then referring that customer to a processor.
Okay, very good. I think I wanted to clarify that. So, okay, great. So, how are the processing rates that people end up paying? How are those determined?
Go ahead.
I'll start here. Yeah, there's you're going to typically have a negotiation at your classic credit card processor with a sales representative who's going to ask you things like, what are you selling? Is the card present? Is it not present? Because that affects the wholesale cost. When the card is not swiped or inserted, it's more expensive. Average ticket. These are all things that will affect their cost. And really your volume is a lot of what most of the industry will base your rates on. So unless you're going with a payment facilitator that does their own software and has some sort of group negotiated rate, you'll be doing this negotiation yourself. And they will base that off your monthly credit card sales volume. So 50,000 a month will warrant probably a higher rate than 500,000 a month. Economies of scale to a certain extent. A lot of this will fall on you and how you negotiate. And it's something that, if I'm shopping for car insurance, I'm not getting one quote, I'm getting 3 quotes. And that's something, I would do with anybody that you're talking to and then compare from there. Ryan, do you have anything to add to that?
No, that's exactly right. And there are a number of ways that that credit card processing rates and fees can be offered, right? From what we call a tiered rate and fee structure to a flat rate and fee structure to what we call interchange plus, right? It's that base or wholesale cost, and there's a small markup above it. We'll go into the nuance about that in a little bit, and we can even share some statements where those rate and fee structures are reflected. But that is how those rates and fees are typically offered by those processors.
Or typically on a case-by-case basis. It's not that one processor has one rate for everybody. Every processor I know of will customize a rate based on that business, unless you get into maybe Square or Stripe, which is not going to be overly competitive for for anybody. So having a custom quote based on your business, a good credit card processor will learn these things about your business, because what's good for one customer, the exact same rate may be not good for another customer. And that's mainly due to average ticket. Most of you know that there's a percentage and a per transaction fee on almost every rate, whether it's interchange plus 0.1% and 10 cents a transaction, or whether it's a flat 2.9% and 30 cents a transaction. That average ticket, let's say it's 10 cents a transaction on a $100 ticket, that's 1/10 of 1% that you're paying as the business owner. That same 10 cents on a $10 ticket is 1%. It costs you 10 times more. So a good credit card processor will ask these things like average ticket to develop a custom quote for you.
Yeah, and Brad, to refer back to what you were mentioning earlier, right? These credit card processors as well know that they're competing with each other. And something to keep in mind is that they might come to you with a rate and fee that sounds phenomenal, right? And build you a comparison that shows you that they're going to save you thousands and thousands and thousands of dollars a month, when in actuality they might be adding additional, what I call fluff fees, right? They're adding these additional fees that go on top or in addition to your rates and fees that account for the profitability they lost. So something to keep in mind as well, and I think you can get that through shopping like Chris was mentioning. But something to keep in mind is when you're having a rate and fee offer, the rate and fee is not the only thing that you should be considering.
Yeah. And don't take the first offer that you're given. Negotiate. If I sign up within the next week, can you go this much lower? Sure. Things like that. Don't take the first offer that's given to you, like most things in life.
Okay. Well, and I think just going back to the starting point of interchange too, realizing that the different types of cards have different rates, right? So back to your point that what works well for one business might not work as well for another, that plays a role as well. Does it not?
It absolutely does.
Yeah.
Yeah, and something to keep in mind as well, right? Well, interchange potentially depending upon average ticket, right? Because I'll give an example. It's what we call corporate standard, but a corporate standard, it's a very expensive interchange example, but corporate standard is 2.95% and 10 cents, right? That might be incredibly expensive for somebody that has $1,000 average ticket, but might be more advantageous than other card types for somebody that has a $10 average ticket, because 2.95% accounts for 2.95% of $1,000, which is a smaller amount on $10, right? And the 10 cent accounts for a smaller amount than does 22 cents, for example, which is what's called regulated debit, but 22 cents on a smaller average ticket. So there's kind of a balancing act there. That said, interchange is a constant, and it is the same rate and fee regardless of business or average ticket. And that's something that has to be accounted for.
Yeah. And some things that you, oh, I'm sorry, Brad.
No, go ahead. You continue.
Oh, a lot of this is, you can't account for, but there's going to be some things you can expect. If you're a coffee shop, you have a small average ticket, you're going to see a lot of debit. People use debit cards on $5 and $10 transactions. Now, a Best Buy or an electronics store selling flat screen TVs, I want to get my airline miles or I want to get my hotel points. I'm going to use my rewards card in that situation. And some rewards cards and corporate cards can eclipse 3% as the wholesale cost. And nobody controls that. Some debit cards, most of them are 0.05%. But there's per transaction fees. A lot of that you just can't control. What you can control is the rate that you're offered and considering the average ticket. How much are those pennies? If it's a 25 cent per item offer on a $10 ticket, that's 2.5%. And that's not good. If know you're a small ticket merchant, you need to be focused on the pennies. If you're a larger ticket, you need to focus on the percentage.
Well, and that brings me to I get this complaint, or I hear this from merchants all the time. Why do you need my, just give me your best rate. You don't need to see my previous statements. But I think this discussion explains why that is so important. It's not that they're trying to, that the processor or your agent, whoever you're speaking with, is trying to rip you off and not give you a good rate. They're trying to ensure that they know how to quote based on what your average ticket is and what your volume is.
Yeah.
And I know, firsthand the impact, because I watch these rates and I know what our rates are because our average ticket is so high.
Mm-hmm.
Our average ticket is well over $1,000, and that really hurts. So anyway, yeah. So folks, that's why you're being asked that. And now I do know that some processors ask for 3 months of statements, and others just ask for one, or different agencies and organizations. What would you recommend? Because it seems like if you're doing 3, you're getting a better average.
Yeah, so when you're looking at 3, essentially what they're looking for is an average, but seasonality, right? How that processing volume changes over those months. Typically what I ask for is the most recent statement, right? I want to see what their most recent statement is, because while sure, there's some seasonality, the important piece is the average ticket. And I can't imagine with the seasons that that's going to change for one specific business.
Okay.
The reason I say the average ticket is important is exactly what you were just referring to, as well as Chris was. Right? You want to make sure that you're building a rate and fee structure around the business and the ticket, because those rates and fees are assessed on a per transaction basis. But, I typically, and I do this as for kind of an easy thing for merchants, right? I don't want them to have to dig through a bunch of files they have. But if they only have one statement, they can provide one statement. Absolutely. Provide your most recent statement. If you want us to take a more in-depth look and you want to provide 6 months of statements, absolutely. But at the very, very least, right, we would only need to take a look at one statement so we can understand what their most recent processing amounts are.
Yeah. And I would add, I'm sorry, Brad, but just add that from being in the industry, doing that 10 years plus, they will typically need all pages of a recent statement, so front and back, just to avoid any delays. So I would send all pages of a recent statement. 1 month is typically fine, but if you're talking to 3 different processors, send the same statement to all 3 different processors. Any legitimate processor will take the time to do a cost comparison for you, and then you can have 3 cost comparisons, see how they line up, and make your decision from there, or at least take the next step. So,
and the follow-up question I started to ask there was if let's say that you're a business that's incredibly seasonal. For instance, you have a huge summer tourist season where you make, significant amount more money over a 3 or 4 month period versus in the winter. Does it make sense to bring that up? Would that significantly change anything potentially?
it would only really need to be brought up. One, you don't want to show them a statement in an off season that has $2,000 of processing in it, because you'll probably get a rate that's based off of that volume. The ethical thing to do, I would say, is be forthright and say, I am seasonal and this is what my annual volume is. And I can show you one of my higher month statements, because that's really going to have the most data in there for them to do a quality analysis. And yeah, and Ryan, I could see you were wanted to jump in there as well.
Yeah, absolutely. So, that's the person, the sales guy that you guys are going to be talking to, right? That should be some questions that they ask. That said, when they're going over rate and fee offers, absolutely kind of give them a holistic understanding of the business. There's some seasonality, right? That said, my average tickets remain the same. It's not more expensive 1 month and less expensive some others, so that they can build that rate and fee upon, again, the average ticket, right? But understanding that the volume that they may be seeing in one statement isn't indicative of the volume that you would experience in a year, right? Or even in your busy months. So that they can build, again, that rate and fee structure around your business specifically. And, good sales guys and good credit card processors should be asking those questions, again, so they can understand the business, so they can work as a partner with you and build rate and fee structures that are tailoring to your business. So they're acting ultimately as a business partner, not just a credit card processor that's focused on generating revenue.
Yeah. And if you divulge information like that helps the processor, you can get helped in return, because if you're seasonal where you need the account shut down 6 months, you need to bring that up to them and ensure that account can be suspended and you're not being charged during months you don't need the account.
Okay. Well, and I think this is good stuff, because I think a lot of us, when we're doing this, we just want to give as little information as possible, because I think our thinking is we're divulging information, giving you the opportunity to charge a higher rate, because, we're just showing you what we're getting charged, and you go, oh, I'm just going to beat that by a little bit. But that's not really what's going on, at least if you're dealing with reputable people.
Exactly. And if you're talking to multiple different people, you'll know who's doing it and who is not.
Sure.
And that's really where it's kind of a fine line. Any processor should be able to give you a quote, as long as you can intelligently, answer volume, average ticket, the way you're processing the cards and what you're processing the payments for. They can quote you with that information. But if your information strays, once you start processing from that could be an out for them to alter the rates. So it's a slippery slope.
Definitely. Yeah. And something to keep in mind. And I know that you guys probably have some bad taste in your mouth from some past experiences with credit card processors. I'm in the industry, right? And Lord knows I have. So it's definitely one of those things where you go out and you shop, right? Same like Chris was saying, you shop for insurance, you shop for cars, go out and shop and make sure that you have a reasonable offer that you're happy with. You can get a better understanding of what those offers are from getting a few offers and having different conversations. And I call it my spidey sense, right? But your spidey sense can get a good feel for what's being offered and what you feel comfortable with, and you can go from there. But it's always good to make sure that you're shopping as well as getting a good understanding of what you're being offered.
Absolutely. So we've ascertained, we know now that obviously Visa, the brands are making money, and we know the processors are making money. Who else is taking a cut of these fees, and are they adding to, or how are they doing this?
So the three big pieces I'd say that are getting a cut, if you will, right, are the card brands themselves. So Visa, MasterCard, Discover, American Express, the card issuing banks, the guys that are providing the cards to you that say Visa or whatever that is on it, right? And then the credit card processor. So those are the three big pieces that are pulling those funds from your account, right? And then those funds are split out to the pieces and parties that are supposed to get their different pieces, right? Interchange is accounted for its cost. Your access fees and assessments, which is part of interchange, goes to the card issuing brands or the card brands. And then the rate and fee that you negotiate, right, above interchange, which can be accounted for in a number of ways. But the rate and fee that you negotiate with that processor above interchange is then taken and passed on as revenue to the card processor or the credit card processor.
And so if you're buying through an ISO, the processor is actually paying the ISO a piece of the pie. Is that what's happening then?
So the ISO actually is taking a piece of that pie, and they have cost that comes as being partnered with those card or credit card processors, almost like card brands, credit card processors, right? They take their piece and they pay the credit card processor whatever their contractually negotiated cost.
Okay.
Right. And that also
around half a penny per transaction. So it's negligible in those cases.
It's dependent upon, agreements and contracts they have with them. But in merchants, you guys are not going to have to really be a part of this. It's definitely good to have an understanding of where everybody's going or all these funds are going. But the credit card processor should be negotiating rates and fees with you that account for all of that, right? That's not something that you guys should have to negotiate. That's accounted for in the rate that's being offered.
Okay.
And
go ahead.
Oh, I was thinking that might be a good transition here into showing some different rate structures, maybe a flat rate versus an interchange plus rate. So one all-encompassing rate versus here's the wholesale cost and maybe 15 basis points or 0.15% on top of that. Because those are the two most common ways to price, and that's how the credit card processor is making their money. And that's the only thing that you as a business owner can negotiate.
Okay.
But I'm sorry if I cut you off there.
No.
But I felt like it was a good transition.
It is a perfect transition. So, and you're going to show some statements, right? Is that what
yeah, I think Ryan has some here.
Yeah, so I'll pull some up here. The first statement that I'll show you guys, and can you see that there?
Not yet. There it's coming, I think. Here we go.
Perfect. So the first statement I'll show you guys is an interchange plus rate and fee structure. While the industry kind of shifts around, interchange plus is a very common rate and fee structure, right? And something to keep in mind is that credit card processors, at least some predatory ones, will come at
now sorry for just a sec here. The statements are blacked out. At least that's what I'm seeing.
Yeah, so I've blacked these pieces out here.
Oh, okay. Very good.
Specific information. I want to make sure that we're keeping merchants. Always something that we focus on is keeping merchants' information private.
Sure.
I want to make sure we're doing that here. But before I jump into this, something to keep in mind is that it's good to understand that there are different rate and fee offers that can be provided, right? The reason for that is I have seen in the past where there are credit card processors that come in and might see that you have, a flat rate that's, 2.25% and 25 cents. They can come in and make it seem as if they are offering a like rate and fee structure where they are completely changing rate and fee structures to something that potentially could be more expensive but looks better, right? So interchange plus is the example that I'll show you guys here, right? On the statement, it can be seen that you have, close to 0.25% here for Visa, MasterCard, and Discover. American Express is more expensive. The reason for American Express traditionally being more expensive is there is increased cost because American Express is their own acquirer, right? They really negotiate their rates and fees, and typically they're more expensive, traditionally speaking.
And Ryan, to go back to your definition earlier of basis points, what would these look like in basis points?
So this is 26 basis points here, right? Or 0.26%. This is 40 basis points for American Express. Again, American Express is traditionally more expensive. And again, the reason for that is there's increased cost for the processor. They have to charge a higher rate because they have to pay those costs to American Express, which is more expensive. But this is the markup above interchange, right? So this is purely what the credit card processor is charging. None of this would go to the card issuing banks or brands. This is the markup above that base or wholesale cost or interchange. You can see that down here by these being listed. You have different specific line items, and it should be shown on credit card processor statements, but specific line items that show you what interchange is. For example, this is a Visa card. This is Visa interchange, but they had 7 of these transactions showing $695.49. Then the cost being on that, right, the rate and fee assessed against that would be 2.35% and 10 cents. This is strictly interchange that's passed back onto the card issuing banks and brands. A trick that credit card processors have done in the past is that to account for margin, right, or profitability on top of interchange, they will add basis points or rates and fees on top of interchange to make it seem as if it's cost where it's not. And Chris can show you guys something here in a second, but these interchange rates and fees are listed, right, on the internet. You guys can always go out there and literally Google interchange costs so that you can match that to what your statements are, so you can spot check to see if they are marking those up or not. They shouldn't be, right? That's not something that credit card processors should be doing these days any longer, but it's always something to be cognizant of to make sure that you are indeed getting the best offer and there's not any smoke and mirrors that are happening.
If somebody were doing that, is it illegal? What are they breaking some rules? What are they doing?
So I wouldn't say that it's illegal. I'd say it's predatory, right? As a matter of fact, there was some I would say bickering. I'll say it lightly. Some bickering between credit card processors where they were in arguments against each other to make sure that some were not doing that where they saw that they were. Those arguments have since petered out, and that's where I'm saying the industry as a whole is moving towards not marking up interchange specifically. There are different ways that they can account for profitability, but they should not be doing that by marking up interchange.
Okay.
But it does still happen.
Occasionally.
That's really interesting.
And there's easier ways than double checking interchange. And I can share that screen if you want, Ryan. And then anybody listening to the call, we can share these links upon request. But I'll just share a quick, actually, Ryan, before we do that, will you please go back to the statement? I want to find one of those interchange rates there so we can cross-reference it with Visa's website.
Yeah, we'll do it live.
If you scroll up to the top, let's see, sometimes the common ones are up top. Okay, so Visa, VS, CPS, small ticket debit. Okay. So I will take back control of the screen, or take control.
And while he's looking this up, guys, I know this definitely isn't the sexiest or most fun stuff. Sorry to bore you guys with numbers and details, but it's definitely something that's good to know.
So, and these are the links, you know, we can share, but this is Visa's website. They are the interchange rates. We were looking for small ticket debit. So let's see here. CPS small ticket debit. So we see 1.55% and 4 cents. And Ryan, if you will check 1.55 and 4 on that statement.
You bet. Yeah. So here we go. Matching at 1.55% and 4 cents. So that way you can jump in there. You can see there's no markup above interchange. And you can have some comfort in the fact that they're just passing on that true cost, right? As they should be, but passing on that true cost.
And there's easier ways to do that, or to monitor your account on a monthly basis, which we'll cover here in a bit. That just takes a couple pieces of information.
Well, this really shows people the different types of cards that you're taking have a significantly different fee structure.
Absolutely.
Yep.
Yeah. So it can, like Chris was saying, right, and this is dependent upon average ticket because rates and fees account for a different percentage of a smaller or larger transaction. But I always use that corporate standard as an example, right? It can go from 2.95% and 10 cents, even higher in some instances, all the way down to what's called regulated debit, which is 5 basis points or 5/100ths of 1%. and 22 cents a transaction. So there's huge variation in what the cost for those cards are. Keep in mind though that that's a standard, right? So no matter what credit card processor you're with, no matter what business you are, you're
Sure.
interchange and it's all the same.
Right.
So here as well, right, in this statement, they're showing that their per item is listed a little differently, and a lot of credit card processors do that. So that's why it's good to go through your whole statement and see where different pieces are. But essentially, the offer for this statement is 0.26 or 26 basis points, but 0.26% for Visa, MasterCard, Discover, 0.4% for American Express, and then 6 cents per transaction, again, above interchange. Something to keep in mind as well is, and this is a pretty clean statement. I wanted to use this because I didn't want to have to bore you guys with going through every little detail in it. But this is again what we're calling potentially a fee that accounts for different revenue, right? So while your rate and fee might sound phenomenal, and this is competitive, right? They're not doing that here. You might have different fees, for example, one of these that are credit card processor controlled that account for revenue. So you might have a batch fee that's 10 cents. You might have, a monthly fee that's $75, right, for access to their gateway, which is something they control. Or, there's a number of fees that can be added, but always keep an eye on the additional fees that are being charged in addition to your rate and fee, because that can really nickel and dime you to the point where you don't have a competitive, effective rate anymore. You're paying a lot for it.
And Ryan, before we move into the effective rate, can you do a quick summary so we can reel it back in terms of there's three people that get paid typically. Yeah. There's the card networks or card brands, which is Visa, MasterCard, Discover, American Express, the card issuing banks, and then there is the processor. So on here, can you show us who's getting paid what? I think we saw so starting at the top, we saw the 0.26% or about 0.25%.
Yep.
That's going to the processor.
Exactly.
And then I think we just see deposits here. And now we see interchange, or we see authorization fees at 6 cents.
Yeah. So that's for American Express specifically, right? So we'll start with what the credit card processor is charging. And I'm going to bounce around on the statement. I just want to make sure that we're kind of segmenting each different piece. So this is processor controlled, right? This is what the credit card processor is offering. It's the 0.26%. And when you're negotiating these rates and fees with the credit card processor, this is what they're going to tell you. It's the 26 basis points or 0.26% for Visa, MasterCard, and Discover. JCB is a Japanese domestic card for Japanese banks. It's not very common. It's actually a legacy of HSBC being a big part of credit card acquiring in the United States. So that was a card they offered. Regardless, that's what that is. It's a bank card. American Express being 0.4%. And then you can see American Express again being 6 cents there. And 6 cents here for your Visa, MasterCard, Discover bank cards, right? So the credit card processor is offering a 0.26% and 6 cents. Right here is interchange. So that's that base or wholesale cost we're referring to that goes to the card issuing banks. All of these are assessed against the same cards that the credit card processing rates and fees are. But
I think it said interchange at the top of that section, right? So it's easily identifiable.
Yep. Interchange fees and American Express program fees, which ultimately is American Express interchange.
Okay.
They detail that a little differently, but those are the same. And then if you come down here, you see your access fees and assessments. These are what the card issuing banks are charging. Again, it's part of interchange, or I consider it part of interchange, but this is the third piece that goes to the card issuing banks themselves. And then lastly, and this is kind of what I was referring to, these are additional fees the processor is charging, right? That should be negotiable, but this is another way that they can account for revenue so that they can then be more competitive with their rate and fee offers.
Gotcha. So obviously this is a touch complex unless you're familiar with it. And I know we want to talk about effective rates as another way to monitor your statements as a business owner on a monthly basis. Are my rates going up? Is there something I need to look into, or is my deal still competitive? So let's talk about that just for a second.
You bet. Yeah. So this is what a lot of merchants should do, right? You guys should be looking at your statements and ways that you can see that your rate and fee is going up and down is dividing your total fees that you've paid the credit card processor, which should account for all that, right? Interchange, the card brand fees, and the markup above it the processor's charging. You divide that amount by your gross sales that you had in the month. In this example, it's $111,430.08. That gives us an effective rate of 2.69%. And that is your bottom line. Essentially, if you're looking at payments that you're making, that's your APR. That's your 2.69%, and that's what you're paying for all of your fees for credit card processing. Different effective rates would be, competitive, more competitive or less competitive, depending upon, average tickets and volumes. But in this example, right, that's not a horrible effective rate. But keep in mind, you always should go there and calculate your effective rate, get an understanding of what you believe that it should be, right? And if you're working with a credit card processor who's reputable, they should give you an example of what a competitive effective rate should be. But always make sure that at least you have some consistency in what your rates and fees are by dividing your fees by your gross sales in any given month. They should be close to the same every month.
So we know if it goes from 2.69 to 2.74% from, say, May until June, that's a small variation. That could be due to the different types of cards that were accepted one month to the next because they have different interchange costs, different wholesale costs.
Sure.
If it goes from 2.69% to 3.25%, would that be cause for concern?
Absolutely. Yeah. So, and, potentially there are some different fees, right, that could be accounted for on an annual basis that can cause some variation there. But what you're looking for is a consistent uptick in your effective rate, right? So if you're seeing something that goes from 2.69% to 3.69%, that's a pretty significant jump, right? That's something that you would probably, at the very least, want to keep an eye on, but potentially you have a conversation with your processor and ask why those fees are increasing, and then go from there and making a decision that best fits your business.
Well, I think there's a lot of people that, are just looking at those initial fees and not looking, or those rates and those fees, and not looking at some of this stuff in the other fees category. But definitely, I think there's a lot of people that aren't calculating that effective rate, and that's something they should really do every month.
Absolutely.
Their bookkeeper or accountant should be doing that every month.
Exactly. It's just a responsible way that you can go through and make sure that, you have a competitive rate and fee, because ultimately running a business, right, is all built upon profitability and cost. So it's a responsible thing to do to make sure that, you're not overpaying for the service that you're receiving, and that it matches the expectations that you were provided originally.
Right. And I think sometimes people don't do this, and I'm really glad that we got to this point, because even as you were going through all of this, it still gets a little confusing. If you're not used to looking at it all the time, it still gets confusing. But the one thing that isn't confusing is you take 2,991.95 divided by the whatever that was for the month, the 111,430.08, and you're going to get your effective rate, and you can do that every month, and it's simple. And that's what you can be monitoring.
It's a pulse check, right? It's a way that you can make sure that again, your expectations that you were originally provided with originally, or that you set with them originally, right, are being matched. And if they're not, it's something that you can do that keeps an eye on where you're at, and you can make decisions to change or renegotiate or whatever, fits the needs of the business, but always helps you understand where you are with your credit card processor.
Well, the other thing you can do, I think, a lot of our customers, a lot of pharmacies that aren't customers, a lot of you listening, you have a lot, you belong to organizations, buying groups, you have close friends in the industry, and you're sharing information with each other. And this is a piece of information you can ask. I say, hey, Joe, what are you paying as an effective rate on your credit card processing? I'm paying 2.69%. What are you paying? And if he comes back and says, well, I'm paying 3.69%, you can say, maybe it's time to look at making a change.
Absolutely. Yeah. And something to keep in mind, right, is that effective rate can be competitive kind of all the way across the spectrum. So, 2.69% when you have a $30 average ticket or a $40 average ticket is competitive, right? However, if you have a different kind of business that has maybe a $5 average ticket or even lower, so you have a car wash, right? And your average tickets are, $1 to $3, and your effective rate at that point is 4 or 5%, doesn't necessarily mean that you have, and I understand that we're kind of going all over the business spectrum here, but doesn't necessarily mean you have a bad rate and fee. It's that effective rate and your rate and fee that you're being offered is tailored towards the business. And
Sure.
smaller average tickets carry a higher effective rate just because the per item is going to account for a larger percentage of that transaction.
Yeah.
But if you have friends that, say you own a restaurant or you own a retail establishment, right? And you have friends that own a restaurant and retail establishment, you have pretty similar businesses. Just like you said, Brad, you can go to them and say, hey, mine's at 2.69%. And they say, holy cow, I'm at 3.69%. At that point, you guys can work together to make sure that you're dealing well with each other's businesses, but making sure that you're getting the best rate and fee offer you can.
Yep. No, and these are all pharmacies, so that not all pharmacies are the same, and the there's obviously a lot of variance there as well for average ticket size, but it's a starting point, and I think this is a great number to be looking at. So
yeah. And I'll show you one more, and I'll make this brief because it's easy, right? This is an example of a flat rate, right? It's a different rate and fee structure that you can be offered. A lot of merchants like these because it's simple. That every single time you swipe your card, you have, in this example, right? And I think this might be a little high, but 4.84% per transaction. Every single time you swipe your card, the interchange assumption is built into cost here, right? So this is accounting for profitability and costs and interchange. And that's it, right? So every single time you swipe your card, you have in this example, and this is a number, right? They've moved the percentage to a number. But if you move your decimal places over, you're at 4.84%. That is what you pay no matter what. And at that point, with the exception of these additional fees here, for example, this is a batch settlement fee. At that point, your effective rate, when you generate that, right, you divide your cost by your processing volume, you should be having something that's very close to what that rate is at 4.84%.
That's high.
That is definitely
that's
high. Yeah. So if you have an average ticket that's above, I'd say $10, right? 4.84% is pretty high.
So call me if you have that rate. I'll beat it.
Absolutely.
Guaranteed.
Let's see. Where should we go from here? I think, we had as a question, why can't everyone have the same rate? But I think we've really explained that. Is there anything we want to add to that?
So, I think that merchants kind of focusing on their bottom line, essentially effective rates, right? There are so many rates and fee structures that can be offered, right? They can account for profitability and they can show you savings in certain ways, right? And it can really get muddy because there's a number of ways that those can be confusing. It's always good to understand what your bottom line is. Like you were saying, Brett, it's always good to make sure that your effective rate is where you're comfortable at, right? Where it matches the expectations that you have for yourself and your business after doing some research, and understanding what those effective rates are or will make things a lot easier for you in understanding instead of focusing on, the ins and outs and nuance of all those different rate and fee structures.
Yeah. And you don't want a one size fits all pricing. Custom is what's best for the business owner.
Yeah. And I think there is, at least at the interchange side of things, there somehow they are evaluating some form of risk here, which is why some fees vary. Plus, I mean, when it comes to reward cards, in some case, in those cases, there's money that's being taken because Southwest Airlines has to get their piece of the pie. I think that's the way that works. Is that accurate? That's why, say, rewards cards can be more expensive
It's logical. They won't. I don't think they're ever going to come out and say it.
But logically, that's yes. Okay.
Yeah.
Okay. So let's talk about another thing that I think has changed. It has changed significantly. I don't remember if it was 5 years ago or how long ago it was, but it used to be a lot less expensive for the merchant if a person used their debit card than their credit card. That has changed, correct?
Sort of, yeah. So essentially what happened is there is I believe he's a senator or a congressman. I forget exactly what.
Senator Rick Durbin. Yeah.
Yeah, I think it's Senator Durbin. Is it Senator Durbin?
It's
Yeah,
Senator.
and Senator Durbin. Yeah.
Yeah, well, I think he's actually still in the Senate, but Senator Durbin came in there and passed some legislature that is restricted variation in debit card costs. So it's actually called restricted debit. But what it shows is an interchange rate of 5 basis points or 0.05%, right? 5/100ths of 1% and 22 cents a transaction. So something to keep in mind is that 22 cents on an average ticket that's very small, say $1, right, accounts for a pretty high percentage of that, profitability the business would make going to credit card processing fees. Alternatively, if you have a $100 average ticket, 22 cents is not bad. And, 5 basis points is definitely not bad. So I think it's kind of a balancing act. And again, you can't really restrict what your customers used to make payments with. But in most situations outside of low average tickets, debit cards and their regulated debit cost are going to show less processing fees for merchants.
Okay. So then encouraging, so if somebody presents a debit card, but they don't put in a PIN number,
Yeah.
does that change things?
That's a point of clarification. PIN debit is almost all debit cards are regulated debit. That's what the Durbin Amendment did. It regulated the cost. So 95% of them are all regulated to the 0.05% and 22 cents. So no PIN debit doesn't really help you from a cost standpoint, but it does help you from a security standpoint. Obviously, the likelihood of not in the pharmaceutical world, I don't think there's too many stolen cards being used, or I hope not. But it's just more of a security aspect because you're not going to get any chargebacks with PIN debit, almost never.
Yeah, and Brad, if you have your customers or if you guys, right, look at the card network on the back, it might say something like Pulse or Maestro. Those are debit networks. And those debit networks, regardless of input method, be what we call signature debit, right, where you don't put your PIN number in there, or PIN debit, so long as it's going through those networks, would carry that regulated debit fee. Now, right, there are ways that go outside of that. Potentially, you could have a debit card that doesn't go through those debit networks, that isn't been assessed that regulated debit, which is actually one of the ones that we were just looking at, that 1, 5, 5, and 4 in interchange. Those can be subject to different interchange costs, and I feel like I'm kind of muddying the waters a little bit. But depending upon the card network, right, whatever those card brands or the card itself is processing through, that is how that rate and fee is assessed. And that's how it is determined, as if it's, small ticket debit or Durbin regulated debit.
Okay. So just to clarify, because this question does arise, is it doesn't really make a difference, with the exception of security, whether they use their PIN number or not. If you just process it straight through as a credit card, it's not costing you anything extra.
I wouldn't say anything extra, but it's a minuscule percentage on a minuscule percentage of the debit cards. So
gotcha.
It's nothing that is noticeable from a cost perspective, but from a security perspective, absolutely.
Okay, great. That does clear. I think that's the point that gets people very confused. So
that's the bottom line of it.
Yeah. Okay. What about surcharges on credit cards? We're seeing it. You definitely see it at the gas station regularly. We're offering discounts for cash purchases instead of using their credit card. What do you think of this? A sound strategy? Any rules that they have to follow? Anything like that?
You bet. Yeah. So what you're referring to there is called cash discounting, right? And you can surcharge so long as you're matching the expectations and the rules that the card brands themselves are placing, upon merchants and processors. With what's called cash discounting, right? You can absolutely charge more, and that is up to business, right? It's a certain percentage, but you can absolutely charge a little more to try and account for credit card processing costs if a merchant chooses to use their credit card instead of cash, right? The piece that is important to remember there is that you have to provide an alternative form of payment. So you can't just increase your costs if they use a credit card while not providing them the ability to pay in another method. for in this example, cash. But so long as you provide another payment method, you absolutely can, charge an increased amount for those services so that, you're accounting for credit card processing costs.
Now, can you exceed the fees? Is there a rule on you can do this, but you can't exceed, the fees that you're being charged, or is there no such rule?
So there is a rule, and to be honest with you, the rules change. So I don't want to speak towards the different car brands and be wrong. This is advice that I give to merchants. If you intend to do that, make sure you're doing your due diligence, right? Different car brands have different requirements. So make sure that you're going in there and you're doing some research into those car brands to make sure that you're matching the requirements those car brands have and you're not exceeding the amounts that you're charging, but they definitely limit the amount that you can charge above what the good or service that you're providing is, so that, you're attempting to recoup those costs. Something to keep in mind as well is that it's a rate and fee. So the higher amount that you're processing, the higher the cost is going to be, right? But you're still generating revenue, and you absolutely have the ability to do that if that's something that matches your business model.
Let's see. We're getting really close here. I know we're getting close to running out of time as well. So let's see. We've talked about the surcharges. We've really seen the statements already, so I don't think, do you have anything else you want to talk about with the statements, or any other fees or anything of that nature?
No, right? And every credit card processor is going to have all kinds of different statements, right? So one of the things that's easy to do is generating and calculating that effective rate.
Yep.
So that you can get like I said, it's a pulse check, right? You can get a good idea of what you're paying overall. That's essentially your APR. And that you can then speak to your processor regarding that, or you can make an informed decision as to, how to best, guide your business when it comes to payments based upon that. But it's always a good point of reference to use the effective rate.
Okay. Chris, do you have anything to add?
No, just thanks for putting up with us here. I know it's like watching paint dry sometimes, learning about credit card processing, and it's complex stuff, but yeah, there's some simple things in there you can do to help protect yourself with finding the right partnership, somebody you can trust, shopping around before you sign up, and monitoring your account on a monthly basis are the best ways to protect yourself, and really the most of which is in your control to do. So but yeah, thank you for the time. We do appreciate it.
No, I appreciate you, both of you, spending the time. And you're right. This isn't exciting stuff, but in a world where we're trying to save money anywhere we can, percentage here, a 0.5% there, or a 1/4% or a 1/10%. I mean, that all adds up. And so I think this was great. There was a lot of really terrific information in here. And I appreciate you both taking the time to join us today.
It's been a pleasure.
Absolutely. Thanks, guys.
Thanks, guys.